If you're prepping for the life and health insurance exam and you want some study guidance on group health insurance terminology, then this video is for you. My name is David DeFord. We're going to be doing a practice exam to help you pass the upcoming life and health exam, specifically targeting group health insurance terminology. Let's begin. What is the primary purpose of group health insurance? Is it to A, employer-sponsored benefits for a group, B, individual coverage only, C, government healthcare replacement, or D, catastrophic coverage for corporations? Answer is A, employer-sponsored benefits for a group. Group health insurance covers employees or members, spreading risks to lower premiums. The employer holds the master contract, members get certificates. So just remember, the purpose of group health insurance is for employer-sponsored benefits. Question 2, what characterizes a contributory group health plan? Is it fully employer funded? A, B, employees share premium costs, C, limited to small groups, or D, covers only basic benefits? It's B, employees share premium cost. The explanation is contributory plans require employee contributions, often pre-tax, while non-contributory are fully employer paid, needing full participation. Number 3, what is the master contract in a group health insurance policy? Is it A, employee benefits handbook, B, individual policy document, C, agreement between insurer and group sponsor, or D, self-funded plan outline? Its answer is C, and that is the agreement between insurer and group sponsor. The master contract sets terms between the insurer and sponsor. Members receive certificates, summarizing coverage, streamlining administrative. So the master contract, again, is just what spells out the relationship between employers and employees for the health insurance. Question 4, COBRA coverage. How long can COBRA coverage typically continue? Is it A, 6 months, B, 12 months, C, indefinitely with premiums, or D, 18 months, extendable to 36 or in some events? The answer is D. So COBRA allows 18 months of coverage post-job loss, extendable to 36 for events like divorce, with beneficiaries paying the full premium. Just remember 18 months or more. So real side note, I'm going to take 90 seconds of your time. If you want to skip this, just skip forward. But I do run an insurance agency called the Dig Agency. And bottom line, the idea behind it is to provide a real opportunity for remote-based sales, whether you want to sell part-time or full-time. Being brand new, you need to be trained well. You need to have access to the best systems available. And at the Dig Agency, we absolutely do that. So a couple of explanations as to what we do. We exclusively focus in life insurance, predominantly final expense, but other life insurance products. And this is a great niche because it's high demand, lots of seniors retiring, entering that age when they think about burial insurance coverage, that's final expense. So it's going to be, and it continues to be, a great opportunity. I think within the last year or two, in one full year, there was 1 million final expense policies sold in just 1 year. Agent empowerment and training, we're very big on this. We offer free high-quality leads, step-by-step sales training, and dedicated hands-on mentorship, all of this stuff you need if you want to be successful. Again, it's fully 100% remote. You work from home. There's no offices to go to. We recruit nationally, and it's very flexible. You decide your hours. You can work when you want, how much you want, on the weekdays, weeknights, weekends, completely fine with us. And we've recruited over 5,000 agents since we started in 2013. And again, the important thing about joining an agency, y'all, I know you're trying to pass this exam, but there's so many people that fail out of this business unnecessarily at a high rate, and you want to avoid those common pitfalls, and you need a structured system that will help you with your long-term goals, and that's what the Dig Agency does. So visit my website, davidduford.com. That's me, davidduford.com, for more details. The link will be in the chat below, but let's continue. Thanks for your attention on that. Okay, question 5. How does HIPAA affect group health insurance? Does it limit pre-existing condition exclusions? Does it mandate individual policies? Does it C, apply only to Medicare, or D, eliminates all waiting periods? So the answer is A, it limits pre-existing condition exclusions. So HIPAA caps pre-existing exclusions at 12 months, credits prior coverage, and ensures portability between group plans. Question 6, indemnity versus managed care plans. How do indemnity managed plans differ? A, indemnity reimburses without networks. B, indemnity uses provider networks. C, managed care is always self-funded. Or D, indemnity covers only for hospital stays. The answer is A. And What that means is indemnity plans allow any provider with reimbursement, managed care HMOs and PPOs, and uses networks for cost control and preventative focus. Question 7, PCP role in HMO plans. So what role does a PCP play in an HMO? Do they provide all specialist care, coordinates care and referrals, or C, bills insurers separately? The answer is B, coordinates care and referrals. So in HMOs, the primary care physician, that's what PCP means, manages care, requiring referrals to in-network specialists to control costs. Okay. Now, in question 8, what is the experience rating in group underwriting? Is it A, based off of industry averages, B, for small groups only, C, uses groups claims history, or D, guarantees fixed premiums? The answer is C, uses groups claims history. And that means experience rating adjusts premiums based off the group's past claims, common for larger groups to reward low utilization. So again, experience is how many claims they actually had, and that's what they rate it by. Question 9, what is the typical minimum group size for coverage? Is it A, 50 employees, B, no minimum required, C, 1 person, or D, 2 or more people? The answer is D, 2 or more people. Most insurers require 2 or more employees to spread risk, though ACA allows groups of 1 in some states. Question 10, conversion privilege benefits. So what does the conversion privilege allow? Does it convert to an individual policy, switch to another group plan, convert premiums to tax credits, or applies to life insurance only? The answer is A, convert to an individual policy. And the explanation is conversion allows terminated employees to switch to an individual policy without underwriting, though at higher cost. Question 11, what is coordination of benefits? Does it A, exceed 100% coverage, B, applies only to Medicare, C, requires pre-claim approval, or D, determines primary payer for dual coverage? The answer is D. And the coordination of benefits assigns primary and secondary payers to prevent overpayment using rules like the birthday rule for dependents. Question 12, stop-loss insurance function. What is stop-loss insurance in self-funded plans? Does it A, halt all claims, B, cover high-cost claims, C, mandatory for all plans, or D, covers employee contributions? So the answer is B, it covers high-cost claims. Stop-loss protects employers from catastrophic claims in self-funded plans, covering costs above a threshold. So what defines a self-funded group plan? Does it A, insurer funds claims, B, only for nonprofits, C, employer pays claims directly, or D, requires government approval? So the answer is C, and that's employer pays claims directly. The explanation is employers fund claims, often with a TPA, for flexible but bare risk mitigated by stop-loss insurance. Question 14, how does ERISA regulate group plans? Do they A, apply to individual policies, B, set standards for benefit plans, C, mandates coverage for all, or D, overrides all state laws? The answer is B, it sets standards for benefit plans. And ERISA ensures disclosure and fiduciary duties for group plans, preempting state laws for self-funded plans. Question 15, what is a multiple employer welfare arrangement? Is it A, a single employer plan, B, multiple employers pooling resources, C, government-run exchange, or D, union-only plan? And hopefully you can connect the question with the answer. It is B, multiple employers pooling resources. And that just means that a multiple employer welfare arrangement allows small employers to pool for group benefits regulated by ERISA and states for solvency. Question 16, tax treatment of employer contributions. Are employer contributions to premiums taxable? So the answers are tax exempt, always taxable, taxable above a limit, or taxable self-funded. And the answer is A, they're tax exempt. Employer contributions and pre-tax employee portions via Section 125 are tax-free, which encourages group plans. Question 17, open enrollment process. What occurs during open enrollment for health insurance? Employers cancel plans, only for new hires, employees change plans without underwriting, or D, premiums adjust monthly. Well, during open enrollment, it's C, employees can change plans without underwriting, and open enrollment allows plan changes without medical questions, and that ensures broad participation amongst all employees. Question 18, how does ACA handle pre-existing conditions? Do they always allows indefinite exclusions, protects only small groups, C, allows 24 months waits, or D, bans exclusions entirely. So the answer is D, they ban exclusions entirely, and that's because ACA prohibits pre-existing condition exclusions, which ensure immediate coverage and essential benefits. 19, probationary period and group plans. So what is a probationary period and group plans? Is it test employee performance, delays coverage for new hires, applies to part-timers only, or D, increases premiums gradually? The answer is B, it delays coverage for new hires. And here's the explanation. Probationary periods, which are up to 90 days under ACA, delay coverage to confirm employee commitment. And question 20, what does ACA impact employer group? How does ACA impact employer group plans? Do they eliminate group plans? A. B, mandate affordable coverage for large employers. C, affect only small groups. Or D, allow unlimited exclusions. So B, it mandates affordable coverage for large employers, one of the biggest reasons it was passed. So the ACA requires 50 or more full-time employers to offer affordable coverage or face penalties, banning exclusions. So ladies and gentlemen, that is all in today's broadcast here. If you would like more information on joining the DIG agency, go to davidduford.com, and please look below for more practice test videos like this for the life and health exam. Thank you.